Hello and welcome everyone. Welcome to Trading Price Patterns. I am Rachel Deschelle, your host for this class and Senior Manager of Trading Services here at Schwab. Please feel free to chat in your questions, comments, requests during the session today. We will have Mike Fairborn in the chat monitoring that. I will monitor the chat as well as we go throughout today's session. And please also give us a follow on X. I am Rachel-CS. Mike is Mike Fairborn CS. We post a lot of charts, a lot of different ideas, and commentary on the market. And please, if you find this show helpful today, please give it a thumbs up, smash that like button there, and please subscribe to us on Trader Talk Schwab Coaching on YouTube. Now, we have some exciting patterns to go through today. We're going to talk about what makes up a pattern. We're going to place trades around those patterns, but first, let's get started with some important disclosures here. So, the information that we're going to cover here is for general informational, educational purposes only, should not be considered any type of recommendation or advice. Options carry a high level of risk and are not suitable for all investors. And we are going to cover the paper money software application today. Keep in mind there are some differences between paper and live. So getting into our agenda for today, we're really going to start how we normally start with this class, which is a general market overview. We're going to review some of our past trades that we have placed over the last few weeks, over the last few sessions. We're going to find and place new example trades and talk through our trading and risk management as well. So given that, let's hop into Think or Swim and let's take a look at what the overall market is doing on this fine Wednesday afternoon. So just looking at the S&P 500, since this is a trading price patterns class, let's just start with that rising wedge that has formed over the last couple months here. So we saw these converging trend lines moving together with higher lows at a much faster pace than the higher highs were being made, really forming that rising wedge. Now, one thing about rising wedges is typically the majority of the time these break to the downside. What makes them even more valid, so to speak, is when you have waning momentum as well. So I put that RSI down here, that relative strength index down at the bottom here, which you guys can see the momentum had been waning to the upside because we saw price making higher highs. We saw the RSI struggling to make higher highs in that sense. And then with that trend break that we saw yesterday of that first level of support, we saw momentum follow suit as well. So right now, we're trying to battle with that 50-day moving average here. We're forming almost like a doji candle right now, which could signal some pause, some indecision at this level. But I think traders will be watching this next level of support right here at the 100-day moving average in orange, which actually kind of lines up pretty closely to this other level of horizontal support here, right around 67.40, 67.30. That's probably going to be that next line in the sand to keep an eye on. Let's just see how far we are from that level. We're about a 1 percentage point away from both moving average and horizontal support there. So if we can't reclaim this today, tomorrow, within the next couple of days at that 50-day moving average, a lot of traders may look for that next intermediate term moving average down here around that 67.40, 67.30 level there on the S&P 500. Let's look at the NASDAQ because we're seeing a similar but yet different story on the NASDAQ here. We saw this ascending triangle taking place. Remember that ascending triangles only need 2 touches of resistance, 2 touches of support. We definitely saw many touches on both sides of these, just really showing how important those levels were that the market was kind of telling us here. So we failed to make that higher high here. Again, weakening momentum there to the downside. We fully lost that 50-day moving average. And actually right now and yesterday, we're testing that 100-day moving average right now. Now, if this breaks, traders may be looking for that next level of horizontal support right at this prior swing low, probably right around this 26 or 22 22,700 level or 22,690 level or so. So that may be that next level to watch. We are probably roughly a percentage point away from that. Yeah, roughly a percentage point away. So that wouldn't be too alarming there. But again, we are seeing that deterioration in the very short-term trend here. Long-term trend is still intact since we are not yet making a lower low on a long-term basis there. Okay, now time for us to review some previous trades that we have placed in this class. And to do so, I'm going to clean up the chart a little bit, hide some of these indicators here, because here in this class, we focus mainly on price here. So let's take a look at some of our old trades. We're going to start with this one that we got stopped out of. This was an inverse head and shoulders where we took an entry at this level of a 2% move beyond that level of a prior resistance. And we placed our stop right at these lows, got stopped out yesterday right at 142.35 there for that stock trade. So that one, we were out of there quick. Another one that we had actually placed, I'm going to zoom out of this one just a tad. We found another inverse head and shoulders pattern where we saw the left shoulder being crafted here, the head, the right shoulder, and then this neckline acting as that level of resistance. We took an entry with a 2% move beyond that level of resistance. We placed our stop down here right below, believe that was 2 percentage points below that level of new support. Then we took our measured move, which was roughly $16, which is that entire depth of the pattern. We placed that on the breakout point, and what do you know? That was one of the times where we hit our target. We got out of that trade actually on Monday, actually, when we made these new highs, really closed that gap or closed a portion of that gap there, and we are out of that trade. So that was just a long stock trade that we took there, took our profits and ran there on Honeywell. Now let's talk about a couple other ones that we have talked about over the last couple weeks or so. I'm going to zoom out on this one as well. Remember, we were seeing a lot of inverse head and shoulders. So these were a lot of bullish reversal type patterns where we saw the lower lows being made with the left shoulder and then the head. Then we saw the higher lows, higher highs being made with that right shoulder there. And this one, we talked about it last week and we wanted to be a little bit cautious of that first initial breakout. One, because there was a gap there, but two, because we saw that initial first move out of the pattern on pretty low volume. So we wanted to place our entry a little bit higher, right around 160.25. So that is where we took our entry. We have our stop right down here underneath support. You can see right around 154 or so. And then we have our profit target up here with that measured move of roughly $23 or so, up here at 177.83. So that was a long stock trade there as well. We are pretty darn close to getting stopped out on yet our another inverse head and shoulders pattern that we saw there. And this one I would say isn't too surprising to me, because the difference between this one and the other one that we saw, this one is slightly less bullish because we are still seeing lower highs being made. And even though we saw that higher high being made in that right shoulder, we still are seeing a lower high being made here, even with that 2% break here on that neckline. So you can kind of see how that one was kind of tilted down a little bit more, while the other one that we looked at, the right shoulder was a little bit higher. So that one tends to be more of a bullish type of inverse head and shoulders, since we have that higher high there, versus on WSC where we saw still a little bit not so much of a higher high there. So still bullish, but less bullish than what we just saw in Constellation Brands there. So hopefully that makes sense there. So let's see if that covers all of our trades. Okay, we had one more actually in here, in and waiting. So we had a cup and handle pattern that had formed. We are still waiting for that break of the cup. So we have our tactical stop up here with that 2% break above resistance there. So we'll keep our watch on that one, but we actually have some new trades today that I'm excited to show you guys. A couple that we have been watching for weeks and weeks and weeks upon end. So if you know which one I am gravitating to, it is this Dell chart that we have been looking at for weeks. This pattern should be printed in textbooks. Now that's my opinion, but that's just because of how symmetrical this pattern looks on the surface, how long it's taken for it to develop, and also such a horizontal line in the sand for a neckline support level as well. So I'm going to zoom in a little bit closer to that one so we can take a look and study this price pattern that we have been looking at in this class over the last few weeks. Now, this is the opposite pattern of what we have seen in our previous trades. This is a bearish reversal type pattern. And the reason why is because, okay, the first half of this pattern, we see a higher high being made. We see a low being made. We see yet another higher high being made, which is bullish, but then we have a sharp pullback to that same level of support, which is kind of giving us a little bit of an early warning sign, hey, this trend may be possibly shifting. Then we saw that lower high being made here at the same level as that couple highs previously, which carves out that right shoulder. Then again, we see that pullback, that touchback to that level of horizontal support. And what do we wait for when we are a pattern trader spotting out these trades? Tell me in the chat, what do we wait for? What do we wait for with these patterns? Because we don't take a trade when we first kind of see this starting to form. Maybe an aggressive trader does when they start to see this right shoulder getting crafted out. But in this class, what do? We wait for confirmation. We wait for confirmation. Yes, I see that in the chat there. You guys are putting that in there. Perfect. We wait for confirmation, which that could look different to each of you as an individual trader. Maybe that is a certain percentage move outside of that level of support or resistance, which is what we use in this class. We use that 2% rule. Maybe it's another rule like waiting for multiple closes beyond a level. Maybe it's a time rule, waiting for a certain amount of time to pass below or above a certain level. But here we're going to use that 2% rule, which we have clearly seen with that decisive breakdown in this head and shoulders pattern. So I already drew a couple of different levels here. I think that hard line in the sand is right around 117.02 is what I'm going to use for that measurement here just in this class. So essentially that neckline is going to be at 117. Now, if we're looking for a 2% move beyond that level, that would have taken us to 114.67. So 114.67 would have given us a 2% confirmed move below that level of support there. Okay, now with this, we see a continued lower low being made today. We have still the body of this current candle is still residing inside the body of that larger candle yesterday. But again, it is still a red candle. It is still a bearish candle, and the price still exists below that 2% move. So that's going to give us enough conviction today to take a bearish directional trade here. And let's just look at kind of where price could go, even if you wanted to use a short stock example where you wanted to go short at that level. We just know a lot of traders don't necessarily take those positions. They may use the options market to take a bearish stance. So that's what we're going to do today with this specific one. But if we're looking for a measured move of this price pattern, we're going to take the highest high there, the highest high in our head, trace that all the way down to that level of support of the neckline. And we're just going to duplicate that drawing and draw it right from the breakout point there. Okay. And where does that show a possible measured move? That takes a measured move of close to $51 and actually places that measured move right at yearly lows here. So we always laugh at this in this class. If you're new to this one, we laugh at how funny markets can be, how funny math can be with some of these measured moves and just how the market enjoys symmetry. So that is why we take that measured move from the height of the pattern, subtract it from the breakout point. Now that's not necessarily a guarantee. That's not saying that price will reach there. But if you are a pattern trader looking to trade this 7-month-long pattern, it may tell you that, hey, if we are going to see a move to the downside, it may roughly take about 7 months to get there. So if you are crafting an option strategy around that, looking to be very directional, a lot of times you may consider that time of the pattern within your option strategy. Now, there are a couple other places where Dell could find support. One of them being, honestly, this gap ledge here right around 107. So that could be one, or I guess not necessarily gap ledge anymore since it was closed, but we had this little range take place. So we may find a level of support there. Another level of support could be right around this nice round number of $100. Okay, so that could be another level of support. And then same with this level here, right around 86 or so. So do you guys see how I am drawing these levels of support? I am essentially just taking gaps on the chart that haven't been filled because those can sometimes be a magnet for price, and previous levels of previous lows, previous highs in this case. So many different levels where if you did have a short position or if you did trade multiple put contracts to the downside, multiple profit taking levels there for a trader there. Now in this case today, we're just going to do a pretty short-term trade. We're going to actually do a bear put spread on this one. So we are going to take a debit spread in this case. So I'm going to go over to the all products tab. And I'm just going to look a couple months out here from expiration. So I'm going to take the 20th of March here and trend trade this one down. And I'm going to look at the put side here on this one. Excuse me. We're still getting over this cough that has been staying around a little bit more than what it's welcomed. So let's take a look here at where we could possibly buy a put spread as a bearish type of risk-defined trade to the downside. Well, we said our support line was right around 117 or so. So we can kind of keep that in mind as we're selecting strikes. It's probably closest to the 115 there. So if we think that price is going to stay below 115 or even make a larger move than that and stay below 110, what we may consider doing is we may buy this higher strike at the 120, which is kind of going to be our leading leg to the downside since it has a little bit of intrinsic value. It is in the money, so it has a larger delta here, which essentially just means that if the price of the stock moves down $1, the theoretical price on this option leg is going to be moving up in this sense, which is going to be kind of like the driving force for this option. Now, we may want to sell this 110, which is slightly out of the money, because we may see that we are looking for that continued move to the downside. We're kind of right around that level right now. It's only 1 point out of the money. So essentially what we're looking to do is we're hoping that price stays below 110 by expiration. And we're paying roughly $533 to do that. And what is the most that we can make on this trade? Well, it's the difference between our strikes minus the debit that we're paying. So roughly $470. Now, we talk about how much we can risk on a trade or our position sizing in this class, which is roughly $10,000 that we can put into any one position. And we talk about our risk size being about 0.5% to 1% in this class, so roughly $1,000 to $2,000. So I'm going to show you what we can do. We can bump this up a little bit to 3 contracts. That will have me risking roughly $1,500 from a covered risk perspective here, because that's how much I'm paying for this debit. Now I'm going to analyze this trade real quick on the Analyze tab. So all I'm doing right now is I'm right clicking on this trade and I'm going to click on Analyze Trade here. And I see a comment in the chat. Chris mentioned wide spreads. Well, keep in mind, look here, we still have spreads that stay within our 10% of that bid-ask spread here. So we have nearly $13 by $14, but $12.85 by $14.05. We do have a decent amount of open interest here, a good amount of volume on the day. We're seeing a similar spread here within the 110 strike as well, with thousands of contracts of open interest, same with volume as well. So I feel safe just in this example trade with the liquidity provided there, placing this for our spread. But I'm going to go and analyze this trade here, and I'm going to cancel this first one here. Make sure you double check on this graph that this date in the upper right hand corner is the date after your expiration. So let's just put this back to on the 21st there. And this will kind of show us what our risk graph is looking like here. Okay. So essentially, we make a profit as long as the price of the stock stays below 114.40. And essentially what that is that is our long strike minus our premium that we're paying, that $5.58, so our debit. So we're going to make money as long as by expiration our price of our stock stays below 114.47, right around there. Now, where could we make our max profit, which is going to be a little over $1,300 since we're doing 3 contracts? Well, we're going to make the max profit on our trade if both of our legs expire in the money, if we close this trade out prior to expiration, with the price of the stock staying below 110 in this sense. So we have our max gain capped off, but we also have our max loss capped off to the downside as well, which we said is just 3 times that amount of the debit. So I'm going to go back to this trade here. I'm going to go in and place this trade in our price patterns group there, and I'm going to hit send on this one. Okay, so we're going to watch that one. We just got filled on that one, and we will just, in this case, try to watch that trade, or try to watch that trend move to the downside in that case. Now, you mentioned, I see a question here, why not do 1 contract with a wider spread? You could, but that's still going to limit your risk, or I guess it's going to still limit your upside still, but also it's going to widen out your risk a little bit more. I know we would be doing 1 contract, so we'd be taking a little bit of that off, but keep in mind it would just widen out that risk to the downside. So we wanted kind of like a tight risk to the downside, which would allow us to do a little bit more, but you can kind of play with the math a little bit on that end. Yeah, Chris, Chris, you mentioned it as well. Price would have to move more in that case. Okay, let's look at the next one here on the watch list, and let's look at ACN. So looking at this, this chart here, what type of pattern do you guys see? I see a pattern, if you want to put it in the chat, I see a pattern that it has taken a few months to form. It's slowly taking its way on this one, but in a sense, we have a longer term, almost like bowl shape pattern in this sense in ACN. So I want you guys to see, put in the chat what you are seeing. Someone sees an inverse head and shoulders, a W, a cup and handle. Yes, we're seeing a few cup and handles there. That is the pattern that I actually see here as well. So I just took these previous lows and I am making almost like this zone type area. So you'll notice here, I use this rectangular tool because a lot of times support and resistance is more of a zone than it is one specific price level. So we can see that this zone has been touched quite a few times. We see this cup really forming, which is kind of like this bowl shape or cup shape pattern. Just kind of imagine a cup of coffee. It has a handle, it has the cup. In this sense, we have this deep cup here, and we have the handle really being formed right here on this lower formation. We did have a breakout in the last week or so. Excuse me. We did have this breakout over the last week or so. Since then, we've had a little bit of a support touchback, and it's still kind of working its way through the price action, the bearish price action that we saw yesterday, but it's still hanging in at that crucial level of support there. So one of the things we may do with this one, since a cup and handle is a bullish type of reversal type of pattern where we have a downtrend really leading into an accumulation period for the stock. We see a little bit more of an accumulation with a retest, and then finally a breakout to the upside. So since we have price coming in from the downside, moving up out of the pattern to the upside, it would be considered a bullish reversal pattern in this case. And so if we want to take a measured move, if this support level holds, if we do see a continued move to the upside, we're going to do the same thing we did in the last one, take the entire depth of the pattern with the lows there and trace it to the highs of where you see that level of resistance. So that gives us about a $50 move. And would you look at that? Two different tech stocks with $50 possible measured moves. We're going to move that to where we saw that break of resistance there. So I'm going to place that there. And that would coincide really closely with another level of resistance that our eyes may kind of spot out on that chart anyways, where we had previous highs there, okay? So again, patterns aren't guarantees. There isn't a guarantee that we're going to see a measured move to that level. But since this pattern took roughly 6 months or so to form, one would likely say that it may take 6 months for it to reach that level. Now, at the many patterns that I've looked at and the trades that we've looked at over this class, we've seen that a lot of times price does make its way to that measured move or make that move a lot quicker than expected. But again, just prepare for that symmetry that we come to kind of expect in markets there. So I'm going to zoom in even a little bit closer here. Okay, what's going to give me confirmation that we're going to have a hold above this level? Well, one of the things I may look for is a close above the high of the low day. So the low day being this candle here. And I'm going to zoom in a little bit more so you guys can see it. Okay, here we go. So this was the low day that really retested that zone of support. And for us to take a trade, for us to give us a confirmed support bounce here, to say that, hey, today's not just a fluke, we're going to see a continued bounce from that level of support, we may look for that close above the high of the low day. So I'm going to look at this high right here that we saw from our low day yesterday, and I am just going to double click on that high right here. So that high is 287.27 here. Okay. So that's where I would be looking for confirmation in that sense. So that may be where I'd be looking as a long trader, and we're going to use a long stock example, which essentially just means we're buying the stock, we're going long the stock. We may look for an entry right around 287.27 because that would give us a confirmed move that this bearish candle that retested that support has been invalidated. So a move beyond there is what we may tend to look for. Now, a couple other things that we may look when crafting out this strategy. I know we talked about maybe a move to those prior highs being a target level. So I'm going to place our target level, not the entire way, but just where we may find a level of resistance, maybe right around 325.71. Another level that kind of screams out to me right here is where we saw another prior high really taking shape right around 306.70. Okay. Now, where might a trader place a stop where we're taking an entry here? Well, we saw the confirmed move above, so we may place our stop using this same candle at that low of support. So right underneath that support zone, that is where we may place our stop in this case, using that same wide range on that candle there. And then as we are looking at these levels, you can see our risk to the downside is if we took 287 minus 272, so I'm going to take 287 minus 272, that gives us roughly $15, okay? So $15 for downside risk. Let's see what we have to the upside. Well, it depends on whether you're going to start taking profit here, which some traders may do. If they do see a run up to 306, they may close out half the position. But if they see us break through 306, we may hold on to the rest of that position or the entire position and move towards that level that we looked at to the upside right around those former highs, right around 325 or so. And keep in mind, that's not even the entire measured move. So if we took 325 minus where our entry would be, which is 287, 27, that gives us 37.73. So that's our upside reward that we just calculated there. Our entry to where we would see our possible measured move, our price target. So 37.73, our reward, divided by our risk to the downside, 15. That gives us a 2.5 to 1 reward to risk there. So a lot of traders would find that favorable. Now, if you want even a more favorable risk to reward scenario in this case, one idea may be kind of one maybe lowering the entry, which we're not going to do in this case, because what are we doing? We are waiting for confirmation. Or another one would be tightening up your stop a little bit. So maybe putting that stop right at that zone of support or even the low of the candle today. So maybe just tightening that up a little bit on the downside, but still favorable risk to reward. We are going to work with this on a first triggers OCO for a long stock position here. We're going to go to buy custom with OCO bracket, okay? And this is what we're going to use. Now, I do see a couple of comments in the chat. You already have a bullish Harami. Would this not suggest an entry today? Great question. I love this question. Thank you so much, Mary, for actually answering this. Okay, so in Barb's Getting Started with Technical Analysis class, she teaches a lot about these candlestick patterns. I would highly recommend, if you are getting started with technical analysis, if you want to refresher on those, definitely check out her Getting Started with Technical Analysis class. It's brilliant. It kind of speaks to what we see on the chart and how you can necessarily infer some information from the candlestick patterns that you're forming. Now, when we do see a candlestick pattern take shape on the day that it's taking shape, we call it a possible bullish Harami in this case. And we call this a bullish Harami because we had a prior day where we had a big red candle, a big down day, and we can see the entire body of that candle, which is the difference between where we opened to where we closed, completely encloses our current day, which is trading up. So for a bullish Harami, we have to have that red candle, then the green candle follow it with that body of the candle, the difference between the open and the close, completely encompassed in the prior body of the candle. But this, I would call it a possible bullish Harami because we don't know that this is a confirmed bullish Harami until we see the follow through tomorrow. So that's again waiting for that confirmation, waiting for that next candlestick to invalidate this existing one, which we saw here. So an invalidation, or I guess not invalidation, a validation of this bullish formation here would be a move above 287.27. An invalidation of this candlestick pattern would be a move below these lows at 272.22. In that sense, price could go either way tomorrow. That's why we want to wait for that confirmation, but really, really great question there. Okay. So let's go through how we can place this order here. We're going to make it good till canceled. We're going to use a buy stop on the entry, which tells us wait until the price of the stock reaches this price of our entry at 287.27 in this sense, okay? 287.27. Once the price of the stock reaches that price, this is going to become a market order. So there's no guarantee when or where it's going to be filled at, but it's going to get executed immediately there. Now our limit to the upside, what did we say we are going to use? We are going to use 325.71, 325.71 to the upside. Excuse me. Oh, and we do have a survey in the chat today. Please take just a minute, even 10 seconds to fill that out. There is only 2 questions there. I really appreciate your guys' feedback, and I do definitely read each and every comment and that I take into consideration with this class. So please do that. Our stop to the downside, we are going to just use a stop market in this sense. Reminder, no guarantee. We're going to place that at 272.22. And as far as our number of shares, we are risking 5% of our account, which is $10,000. We're going to take $10,000 divided by our entry price of 287.27, and that gives us 34 shares that we could buy. So we're going to change that to 34 shares. Okay, so I'm going to hit confirm and send here. We're going to double check the order. Read the order. We're all good till canceled. We're going to place this in the price patterns. It looks like those prices look okay to me. And so I'm going to hit send here. Okay. Now, something else on this chart. I saw a question, or I saw a comment in the chat about this particular stock. And maybe why I picked this particular stock. I found it less than boring because we do have a breakout in relative strength. So I'm going to actually add this relative strength chart down at the bottom here and just kind of show you what I was noticing at the same time we had that first initial breakout before the support retest here. And why this is important for you guys as technicians to keep in mind when you are investing, trading, all the sorts. So this is essentially a ratio graph of ACN divided by the S&P 500. So it takes ACN in the numerator, the S&P 500 in the denominator. And so when this line is going down, that means that Accenture was underperforming the S&P 500. Now, when this line starts to bottom out a little bit, that shows that we could be seeing some possible improvement in relative strength versus the S&P 500 in this sense. And when we start to see the line going up, making higher highs, higher lows, we start to see that signal of possible outperformance in this particular name compared to what our benchmark is. In this case, I just use as an example the S&P 500. You could use the software industry, you could use the tech sector for the comparison symbol in this study, whatever you wish. I just found that under the studies beaker there. But I found it interesting that this relative strength chart showed an inverse head and shoulders pattern with a breakout and a support retest at the same time that we saw that breakout in price. So typically when you do see those two coupled together, that typically gives a strong signal as far as just possible possibly more rotation, more capital kind of flowing into this name, especially if it holds those levels of significant support that we looked at. So that's kind of why I picked out that one. Hope that gives you guys a little bit more context, another little tiny little lesson in technical analysis there, maybe something to keep on your radar as well for the future. Now we only have a couple minutes left, so I wanted to go through near the end here with the last couple minutes, really our watch list of price patterns that we are watching here for the future. So I did see some bear flags kind of take shape in some of the financials, and I'll show you a couple of these. This one was a bear pennant that I really saw in Wells Fargo, where we take the high from this aggressive move to the downside. We saw price consolidate. Then we saw that breakout to the downside. That flagpole is roughly $8. That could place us at these lows right here, right below 80 or so with a measured move. Again, it's not a guarantee. And Ted, I know I just saw a question in that chat. We're not comparing the RSI compared to the S&P 500. We're comparing the stock to the S&P 500. So that's kind of what we're doing in that case. We are just looking for outperformance on a relative basis. That's typically what a lot of technicians will use when it comes to comparing an asset to a benchmark for looking for alpha in that space, so to speak. Now, Bank of America, same type of thing. We saw that big move down about, well, only about $4 or so. Big move down. We're seeing that consolidation still exist here with this possible flag. Could see a measured move down to 48 or so. So that's another one to keep on the watch list. I saw a question there for that measured move. I just took when that strong trend kind of really began in this case with this bear flag and connected it to those recent pivot lows. So that's what I just took for that measured move. Same thing with JP Morgan, kind of going through the same thing. We took the high point that we saw from that big red candle, connected to that low, and we saw that breakdown yesterday, kind of a continuation of that today. In this case, if we took it, that measured move from the breakout point, that could give a little bit of a further drawdown to those previous lows where we kind of saw before there. Couple other ones that came on my radar, Oklo with an inverse head and shoulders with the neckline right around 117 or so. We see this left shoulder, the head, and the possible right shoulder here. Could see a little bit more drawdown and match that left shoulder even more closely. But again, we just call it a possible inverse head and shoulders until that neckline resistance is broken there. So keep that in mind. Another one that we are keeping on our radar is BJ's. So we see this long range over the last few months. Again, waiting for that confirmed breakout of that level of resistance, which we're still not quite seeing yet today. And then to top it off, NVIDIA. Can't unsee this one. This is a possible head and shoulders here, slightly less bearish just because these lows on the neckline are still making higher lows in this sense, but we see the left shoulder taking shape, the head, the right shoulder, and that measured move from the highs to the neckline would be roughly $44 or so, and placing us at a possible measured move around that 128 zone or so. So again, we do see that chat or that survey in the chat there. If you guys could take a moment to fill that out. I know we breezed through some of this today, but keep in mind this webcast will be archived within a few hours. by worst case scenario, maybe early tomorrow, where you can watch this back, you can pause, take a little bit more breathers in this sense. But you guys have asked for more symbols, more trades, so I try to pack as much into these sessions as possible. So thank you so much for your time in our session today. Thank you, Mike Fairborn, for just helping out in the chat. I want to give my mom a shout out. She's actually in the chat too. Hi, Mom. But thank you all for tuning in today, and I will see you later, traders. Please give us a thumbs up and a subscribe. Have a good one.